Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com. You can find the link to the website in the description below. The broader shipping industry has been on fire in 2024, energized by tensions in the Red Sea and Suez Canal, which have increased the demand for vessels and extended trade routes, adding 1 to 2 weeks of transit time and added costs of $1 million in fuel charges. These fears are responsible for overall rising ocean freight rates, which could range $20,000 per day and even hit a pre-2020 health crisis era peak of $30,000 per day. Ultimately, these industry tailwinds will ease, and that's why it's important to consider the long-term outlook for a global shipping and dry bulk industry. And for dry bulk carriers like United Maritime Corp, traded on NASDAQ under symbol USEA, the long-term outlook remains bright. John?
Yeah, thanks, Mo. In 2023, the dry bulk shipping market was valued at $162.6 billion. Now, between 2024 and 2032, the market size is projected to expand at a compound annual growth rate of 4%. Now, that strong growth is expected to come from a rapid urbanization, with cities needing vast quantities of construction materials such as steel and cement. Now, other examples of dry bulk include coal, grain, bauxite, phosphate, and fertilizers. Now, to support the need for massive infrastructure development, cities will need to rely on increased shipments from specialized dry bulk vessels, the exact kind that you find in United Maritime Corp's fleet.
What can you tell us about United Maritime Corp?
The Greek-based company is a diversified international shipping company with a fleet of 8 vessels with an aggregate cargo carrying capacity of a little more than 922,000 deadweight tonnage. What does that mean? That's the total amount a ship can carry and includes cargo, crew, provisions, fuel, and water. The company's goal is to grow its fleet and meet industry demand. For example, in July 2022, it acquired 4 tankers before the current market run and sold 4 tankers for a combined profit of approximately $40 million. And in early 2023, it acquired 2 Japanese Kamsarmax vessels and 1 Japanese Panamax vessel. It also sold one of its long-range 2 vessels at a surprising premium of 85% over the vessel's acquisition price.
I was reading on incomeinvestors.com that the first quarter revenue more than doubled at this company.
Yeah, for the first quarter ended March 31st, 2024, United Maritime announced that revenue increased 278% year over year to $10.6 million. Now, net loss improved to $1.3 million, or a loss of 15 cents per share, and adjusted net loss improved to a loss of $1.1 million, or a loss of 13 cents per share. And the all-important time charter equivalent rates, or TCE rates, that's the average daily revenue performance, that was up 47% year over year at $15,165 per day. Now, looking ahead, management said that it has fixed approximately 95% of its second quarter days at an average rate of $17,300, with expected daily TC rates for the full quarter to be at similar level.
It declared its 6th consecutive quarterly dividend of 7.5 cents per share.
As one would hope, one of United Maritime's goals is to reward shareholders. Since its inception just this past November 2022, it has returned total cash dividends of $11.4 million, or $1.45 per share. Now, that represents actually a pretty solid 46% of the company's total market capitalization. In the first quarter of 2024, the company declared its 6th consecutive quarterly cash dividend of 7.5 cents per share, or 30 cents per share on an annual basis, for a forward annualized yield of 11.5%. Now, management said it remains optimistic that the positive market conditions will allow it to consistently reward its shareholders in the next quarters. Now, will it be able to raise these payouts? TCE rates are up, which should help boost profitability. Moreover, the current payout ratio is just 58.8%, so a dividend increase is certainly not out of the question.
The USEA shares have triple-digit upside potential.
Yeah, USE shares have traded in a relatively tight range since the start of 2023, but they're still trading up 13% year to date and 8.5% over the last 12 months. Now, currently, or as of this recording, trading at $2.57 per share. USEA Stock needs to climb almost like an additional 60% to reach its July 2022 record high of $4.09 per share. Now, despite the big gap, Wall Street thinks United Maritime stock will do more than that over the coming quarters, with an analyst rating of $6 per share.
John, thank you so much for your insights. Just to recap, United Maritime Corporation is a dry bulk shipping company with a fleet of 8 vessels. It reported a strong revenue and time charter equivalent growth, improved its net loss, and has fixed roughly 95% of its second quarter days with a TCE rate well above the first quarter. Consistent with its practice of returning capital to shareholders, the company declared its 6th consecutive dividend of 7.5 cents per share. The outlook for United Maritime remains solid based on limited new deliveries of vessels and continued strong dry bulk commodity demand, with its mixed fleet of vessels well positioned to take advantage of these developments. And it's a scenario that management says will put it in a position to handsomely reward our shareholders. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned, and in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.